Okay, so let's see. It is now officially 12:01. That is a good start time. And we are recording. So, thank you everyone for joining. We had a lot of interest in this, and this is now an annual event. I think it's the fourth time that Chad is back. So, Chad Oakley is the CEO of Charles Aris, which is one of the leading retained search firms in the United States for clients that are looking to recruit a former management consultant, or for consulting firms that are looking to recruit, someone at the mid to senior levels. Chad, welcome back. I think we're going to have you just sort of open with some initial remarks, what you're seeing in the market for full-time roles, and then please put your questions in the chat. I'll be helping to facilitate Q&A as we go along after Chad kind of gives us a brief overview. So Chad, over to you.
Yeah, thank you, Will, so much, and Megan, and hello to everyone from the Umbrix community. It's always a privilege to be back here talking with all of you about kind of what we're seeing in the marketplace at Charles Aris. Maybe I'll start with, just so you guys, for those of you who aren't familiar with Charles Aris, let me just give you a little bit of backstory on who we are. So we're an executive search firm. We've been in business now for 55 years. The company was started by my father. I'm actually second generation in the firm. We have a little over 100 people on our team, which does make us one of the larger recruiting firms in the United States. We specialize in 4 different areas. One of those areas is a practice that I started when I joined the firm 21 years ago, and that is our strategy and go-to-market practice. That's a practice that places individuals into corporations, private equity firms, and portfolio companies of private equity firms that typically do things like heads of strategy, or a chief of staff role for a CEO or another key executive, transformation roles, post-merger integration roles, or kind of PMO positions. That's kind of that core strategy area where we spend a lot of our time. Our firm has completed just over 1,450 of those positions in the last 21 years. So we're very well versed in that particular space. We also have a finance and corporate development practice that is actually even larger than our strategy and go-to-market practice. That's a practice that does 4 things. We place CFOs, controllers, FP&A candidates, and then corporate development individuals or former investment bankers into merger and acquisition roles. We have an engineering and operations practice that does supply chain, chief operating officers, plant managers, and the like. And then we have a CEO, president, and board level practice as well. So that's just a little bit about Charles Aris. My personal background is consulting. Probably like many of you, I am a former consultant. I started my career at Deloitte Consulting. I went to Wharton for my MBA, and then I went to Bain and Company in their Boston office and spent a number of years there before coming here to kind of join Charles Aris in the family business. Here's what I thought we'd do, team, is we'll just talk about the market and kind of how the market is changing for consulting and kind of what the marketplace is looking for right now. And I'll go ahead and I'll spend some time talking about kind of where we were a year ago and how things have changed over the course of the last year. And then we'll talk about what we're seeing today, and then I'd love to answer questions. If I fast forward to where we are right now, spoiler alert, it's the age of uncertainty. And I'm sure you all are probably experiencing that, but there's a number of factors that are kind of driving that where we are right now. But I can talk a little bit about what we're seeing in the marketplace. So let's go back in time a little bit. So let's go back maybe 1 year from today. So back in April of 2024, let's call it. At that time in the United States, consulting in general was down. At least it was down for kind of the top consulting firms. If you think firms like Bain, BCG, McKinsey Strategy, and L.E.K EY Parthenon, all those types of firms, if you will, consulting was kind of down. It had been down for really the previous year before that. 2023 was a down year, and in 2024 was definitely a down year as well. That downturn, as you guys all know, and as you certainly will remember, was driven by one major factor. That was the higher interest rates, right? Inflation was through the roof coming out of COVID, stimulus that the Biden administration had implemented. Jerome Powell and the Fed reacted by raising interest rates to slow spending in the U.S. and to get inflation under control. We all know this. Those higher interest rates, they worked, right? Companies retrenched on making new investments, whether they be in the form of capital expenditures or hiring external service providers such as consulting firms or independent consultants, right? So we saw that retrenchment, and so those consulting firms experienced that. Perhaps the bigger impact on consulting firms, the bigger firms, Bain, BCG, McKinsey, those firms that I named, right? The bigger impact for them, though, was in the world of private equity. Higher interest rates, as you guys all know, completely changed the value of companies because the cost of capital went up so much. Suddenly, leverage buyouts became a lot more expensive. So M&A activity really almost crashed is probably the best way to say it, certainly compared to the boom time that the market had experienced in 2022. The portion of work that consulting firms had been doing with private equity firms had grown dramatically, right? Private equity, as you all know, private equity in general has grown dramatically over the last decade, right? I mean, it is hard to find a middle market company these days that isn't owned or have some partial investment by a private equity firm. So when private equity M&A activity slowed dramatically, so did their need for consulting services. If private equity firms are not doing that due diligence on a bunch of potential deals, then they don't need the support of consultants, et cetera. So the biggest impact and on the slowdown for consulting services really was the slowdown in private equity. And that continued really for the rest of last year. All of 2024, private equity felt that pain, consulting firms felt that pain. And so really consulting was largely down. What did the consulting firms do? This is what we talked about last year when we were talking together. They rolled out their recessionary playbook. I know technically it may not have been a recession, but for the consulting firms, it definitely felt like it. So what did they do? They hired less people. They gave fewer promotions because promotions come with raises. They gave out fewer what I'm going to call top bucket ratings, right? Consulting firms rate their consultants, and depending on where you fall on your rating, that drives your bonus. So top bucket ratings come with higher bonuses, and they more aggressively kind of managed people out of the firms. You know, one thing actually maybe that I'll share with everybody. Will, can I share my screen here? Can I?
Yes, you can.
Okay, awesome. One thing that maybe I'll share with everyone. This will be very, very insightful. Hold on, let me. This is our internal intranet, and some of you may be familiar with this. We produce a ton of compensation studies team, and if you're not on our subscription list, you probably want to get on our strategy newsletter. You can do that on our website at charlesaris.com. But I'm going to pull up our most recent compensation study. This was our current consulting compensation study for 2025, and the data point. Can you all see this? Will, did this show up for you guys?
Yes, it does.
Awesome.
We see it.
Here's the data point that I want to maybe share with you guys right here. Here's what you're looking at here. Let me orient you to this data. This is basically current consultant compensation by graduation year. So these kind of maroon colored bars here, these are all undergraduates, right? Starting with 2024 undergrad offers. So, and the firms that are most primarily represented here, team, are largely Bain, BCG, and McKinsey, but with these other like-minded firms as well. So if you're a 2024 undergrad joining a Bain, BCG, McKinsey type firm, last year you would have been paid a base salary of about 110, along with a bonus of roughly 9. This all in, you're at 127, right? And you can see this for the undergrad years. Here's where we start with MBA years, right? So if you're a 2024 MBA, you're graduating from a top school, Harvard, Wharton, Stanford, one of those. Your base salary would have been around 194, bonus of 41, some one-time bonus like a sign-on, getting you to 267. Here's the interesting part. Look at the base salary for 2024 and 2023, okay? In this particular case, now also look at the end down here. This is important. We had 98 data points for 2023 and 25 for 2024. They're virtually the exact same thing. That's the first time. We've been doing this study for 15 years. First time we have ever seen these numbers be virtually the exact same. They're almost always an increase. It doesn't have to be a huge increase, but there's almost always an increase. What you see here with these subsequent years is about right? You kind of see it go up by at least 5, 10% or something like that. But it was the exact same for those 2 years. That is probably incredibly indicative of what the consulting firms were experiencing. They did not give a raise for first-time consultants coming out of year one, if you will. So that just shows you that the market was effectively depressed. They were landing people 2 classes in a row at the exact same compensation level. And that's just, very, very unique, something that we really have never seen before. So that's a fairly telling indicator of where the consulting firms were on that particular base. Okay, so that's kind of the bad news. But then something good happened, right? Something really, really good happened. In January of this year, the market started to rebound in kind of what looked to be a really healthy way. This was driven by 3 primary factors. The first, as we all know, interest rates started to come down a little bit, right? From September of last year to the end of the year, the Fed made 3 interest rate cuts, one in September, one in November, one in December. While they The cuts weren't necessarily huge. We really only went from 5.5% down to 4.5%, but they were a great signal that inflation was under control and that we were headed in a positive direction. Even better, the Fed, as you all remember, signaled that they projected further interest rate decreases throughout 2025. So that was number one. Second was that in the world of private equity, the market was normalizing to these higher interest rates. What I mean by that is that, think about private equity, right? They're buying companies. So if I'm a seller of a company, if I own a company and I'm interested in selling, but when those interest rates went up so much, I basically held back because my valuation was decreasing. But I've been holding out, hoping that maybe interest rates would come back down. Those individuals who really wanted to sell were probably getting a little desperate. And they were starting to accept the fact that interest rates weren't going to drop to pre-pandemic levels anytime soon. So they could either sell now, like at the beginning of this year, or wait 12 to 24 months and hope that interest rates dropped further. And many of them were saying, you know what, interest rates have dropped a little, which has improved my valuation a little. I think I'll sell now. And then the third factor was our very bullish on business newly elected president, right? Trump's a business guy. He's going to rally the markets better than Biden could. He's going to eliminate red tape and business regulations. Business is back, right? Here we go. And so this really did create some very solid momentum in the economy here in the first quarter of 2024. Companies started to make investments again. Private equity firms started to do deals again. All this created stronger demand for consulting services. So consulting coming out of the beginning of this year was off to a great start. Consultants were no longer waiting on the beach for their next project. They were really suddenly quite busy. It looked like 2025 was going to be a great year for consulting, great year. And then, as we all know, our very bullish on business president changed everything by implementing these tariffs, right? And a lot of tariffs, as we all know. And this has candidly arrested all of that great momentum for the consulting firms. It has arrested that momentum because tariffs of this magnitude create uncertainty, and when business leaders face uncertainty, what do, right? They freeze, they wait, or worst case, they might maybe even retrench. Nobody has a playbook for this yet because we've never seen tariffs at this level before. So nobody really knows what's going to happen. Furthermore, our current president has a history of changing his mind, right? So there's really it's virtually impossible for a current CEO or a business leadership team to commit to action based on the current tariffs when there's a decent possibility that those tariffs will be altered in the near future. I was talking to the CEO of a publicly traded company earlier this week. He's in the manufacturing space and he has manufacturing facilities in the United States, China, and South America. And here's what he told me. He said, look, I know that the president wants companies like mine to onshore manufacturing, but that takes years to implement. And there is no way that I can justify that kind of investment. That is a massive investment for us to make. I can't justify that investment knowing that the current level of tariffs will likely come down between now and by the time we get that facility built. That would just be an unwise investment. On the private equity side, tariffs completely alter the valuation of companies, right? If you're a manufacturer with an international manufacturing base, or if you're an importer of goods, the net present value of your business just got thrown out the window. So all of that deal momentum that was looking good, as early as 3 months ago, just kind of came to a screeching halt. And all of that translates into consulting services. So all of that momentum that the consulting firms were enjoying just kind of got thrown up into the air as well. All right, but there are some good things that are happening in the marketplace, right? So let's talk about where we are right this second. As I mentioned before, we're in this age of uncertainty. While the consulting firms are still working on projects that they sold, in the first few months of this year, they are holding their breath a little bit that these tariffs don't kind of destroy that positive momentum, but they are already seeing the phone ring a little bit less. Definitely not even a little bit less, a lot less than they did before. So what are consulting firms doing right now, right? They're trying to be strategic about the consulting services that they are emphasizing for their clients. So look, we all know this. What's the simplest definition of strategy, right? The simplest definition of strategy is where to play and how to win. So if you think about where the consulting firms are trying to play right now, it's in a few key areas, which I will encourage everyone on this call to be thinking about as well. The number one area of focus for consulting right now that they're pushing in the marketplace is consulting to the supply chain. Companies are trying to navigate the impact of these tariffs, the impact of these tariffs will have on their supply chains. They will need support from smart, thoughtful supply chain experts from the consulting firms to figure this out, right? This takes a lot of different formats, right? It could take the form of helping companies to reshuffle their manufacturing base from high tariff countries to low tariff countries, right? Everyone that does any manufacturing in China right now is trying to find, all right, can I pivot this to Vietnam? Can I pivot this to Malaysia? Can I pivot this to like Mexico? Can I bring it in, to some of my my current facilities in the United States, et cetera? But figuring that out is a big driver of what supply chain consultants are. There's going to be a lot of procurement renegotiation that takes place, right? So the consulting firms will help their clients think through renegotiating procurement contracts with global suppliers. They're going to help them to think about how can they best pass the impact of tariffs onto their customer base in the form of higher prices or less relevant terms, or things like less attractive terms. They're going to help them to think through, maybe we need to acquire competitors that have a supply chain structure that is more favorable in this current tariff environment. So that supply chain structure is, without question, hands down, number one area of focus for consulting firms right now. We're hearing this from partners left and right? They're gearing up for a bulk of demand for supply chain services. Rest of services are a little bit questionable. The second thing is they're trying to maybe spend their time focused towards companies that are less impacted by tariffs, right? Services firms are not impacted by tariffs, right? So for them, it's mostly business as usual. Consulting firms are doubling down on the consulting playbooks for their services firms. This would include blue collar services and white collar services as well. That's also a major area of focus for private equity firms right now. So they can acquire those businesses without a huge impact to the valuation. So that's another reason why consulting firms will focus on services businesses as well. And then we're hearing a little bit of rumblings of maybe consulting firms bulking up on their government advocacy space, right? Lobbying, if you will. How to navigate Capitol Hill, create influence with lawmakers, kind of things along those lines would be kind of the third area where we're seeing a little bit of attraction on that front. But fine, team, I'm going to pause for a second. I'm happy to answer any clarifying questions about anything that I mentioned, and Will, of course, I'm happy to take any questions that people have in the group.
All right. Well, one, inspired by some of the comments, I'm surprised that you did not talk about in your list of priorities of what you're seeing, kind of companies looking for help using AI to, transform their call centers or transform their workforces, implementing, using agents, doing sort of AI-led transformations. To what degree are you seeing that?
Well, you know what? I totally should have mentioned that. AI is a huge driver of consulting services today. That's a total. I was really focused on the impacts of the tariffs and things like that, which the AI piece doesn't have any impact on. But there's not an email that comes out of kind of Bain, BCG, and McKinsey these days that doesn't have AI in it. There's not one. So they're hyper focused on this. Now, I will say this, team. As we talk to consultants in the marketplace, and also as we talk to just clients in general, there's still a lot of companies that will, and I'm talking very successful, big brand companies. I talked with the head of AI at one of the top 3 private equity firms from assets under management in the world a month ago, and that person said, our current belief is that the impact of AI is not going to be hugely significant in the next 18 months. That we're still trying to figure out how to really add value with this technology. And so I think companies are still trying to wrap their arms around, how do we really use this in a way that truly creates impact for us? But yes, it is a buzzword, right? I mean, the concept of fad surfing in the boardroom is very true in all regards, and AI is the latest fad. I think we all agree that AI is incredible. For those of you who use it, I use ChatGPT 10 times a day, I'd probably guess. And so it's really compelling on that front. But it'll be interesting to see how much it truly changes the way that business is done in the next 12 to 18 months. Let me mention that, Will, if I can.
Chad, talk to us a bit about the trends that you're seeing in terms of full-time roles at companies as opposed to at consulting firms. You have like a good visibility. Most folks on this call are, happy as independent consultants, but occasionally people will get asked with opportunities for full-time roles. What are the trends you're seeing there, the types of roles and skills that are in demand?
Yeah, so we have seen a fairly significant amount of growth in what I'm going to call interim executive hiring in the marketplace. specifically around this world of private equity. So what I mean by that is where that private equity firm will hire an individual for a limited period of time. And the primary roles where we see that happening are in finance, so interim finance positions, and then also within strategy, right? So I have a very specific strategic project that I need some help with, and I want someone to come in on an interim basis. Those are projects that typically a firm like Bain, BCG, or McKinsey might have led for these organizations at one point, but now a lot of private equity firms are very comfortable talking to independent consultants and saying, hey, I don't need that $1 million project from a big three consulting firm. If I found two really, really strong independent consultants that could join me for the next 3 months or so, I would do that. So we've definitely seen, in fact, I've got a call next week with a private equity firm that wants to talk strictly about interim services to say, hey, it's a growing trend for us. So for those of you who are independent consultants who like to do interim projects, now's a pretty good time to be reaching out to the marketplace to see if there's viable opportunities on that front. And by the way, team, again, something that I've shared many times on the past here on these calls is specificity matters a lot, right? So for those of you who are generalists in the marketplace, who you're the Swiss Army knife, there's a lot of things that you can do in a market like this. I will encourage you to narrow your scope a little bit and talk more about the top two things that you spike in, right? What are those two types of projects that you can roll your sleeves up and dominate in the marketplace and do in a very compelling way for a client? You're more likely to get a positive reaction and to find more opportunities if you narrow your scope. And this is sometimes hard for consultants, right? Because we don't want to lose out on an opportunity, so we want to keep ourselves open to everything. But I can't stress this enough. Limiting your scope of services that you talk about in the marketplace will help you to land more opportunities over time. We're big believers in that.
Tell us a bit about the structure at these PE firms when they are looking for interim roles. To what degree is it just sort of an individual operating partner will, individually sort of have their own approach to taking a search, or are some firms more centralized where there's a head of human capital that's responsible for driving these searches? So for folks on this call that want to get access to those opportunities, is it like, who do you try to talk to at these PE firms to get into that line of sight?
Yeah, well, it's a great question. And the bad news is there's no one structure for these private equity firms, right? Private equity firms in general, on average, there are two primary groups within them, right? There's the deal team. They are out there hunting for new acquisitions, valuing businesses, negotiating businesses, right? Landing those companies. And then alongside the deal team is that portfolio operations group. That team, they take all shapes and sizes. Sometimes they work in conjunction with the deal team and might help with due diligence efforts and things like that. Other times they're really almost completely separate, right? They really don't get involved until a company has been acquired. And in that time frame, that portfolio operations group job has been to help define the value creation plan for that portfolio company, and then implement and execute on that value creation plan and hold the management team accountable for that execution plan to make sure that we reach our full potential, so that when the time comes to exit, we exit at full value. Will, to answer your question directly, I'd say that larger firms definitely have a centralized talent team on the portfolio operations group. So oftentimes you'll find, for larger firms, you'll find a managing director whose entire job is to help the portfolio company think about talent. In those instances, that person, that internal talent individual, is going to know all of the key roles that are trying to be filled at each of their portfolio companies, and their job is to work with the right search partner or to find the right interim executive that can help them with a particular project. So, Will, those are individuals that probably reach out to you, right, and say, hey, Will, at Umbrick, we need some independent consultants. Could Umbrick help us with that on that particular piece? For smaller firms, they usually don't have a dedicated talent partner in the team, and the operating partners, who are each managing different portfolio companies, they make those decisions on their own. So, but the short answer is, if you have an interest, anyone on this call has an interest in doing work in the world of private equity, I would strongly encourage you to figure out who, the question number one is, which private equity firms invest in industries in which you are an expert? So start with that. The second piece would be to figure out, all right, now that I know which private equity firms invest in my area of expertise from an industry perspective, go to that firm's website. Almost all private equity firms list their team members on their websites. Go to that website, figure out who are the portfolio operations partners, and if they have a talent leader on that group, and I'd be reaching directly out to them. Team, keep this in mind. 1/3 of what every single private equity partner's job is to think about talent in the portfolio companies. It's 1/3 of their entire job. Okay, so they constantly are building their database on experts in the marketplace that they can leverage when they have those particular needs. So you may not get an immediate response from them, but I promise you, they care about hearing about good talent in the marketplace and the services that you can provide.
Chad, I'll just mention, I dropped in the chat a link to a resource that Umbrex published recently on private equity operating partner groups. So we have profiles of the top 50 PE firms and real detailed history and structure of those operating groups at each one. Chad, you also, I understand, work on helping consulting firms hire at sometimes experienced hire, mid-level partners. Talk to us about the types of trends that you're seeing there, what practices are hiring, what geographies or what functional areas.
Yeah. Well, so, we haven't seen, by the way, team, I'll just let you know this, we haven't seen a huge amount of hiring at the consulting firms at the partner level or things like that over the last couple of years. The market's just been a little bit depressed. What I will say is this, when a consulting firm is hiring an experienced person at kind of that partner level, that more senior level, that person is bringing an extremely specific skill set to the table that they're further trying to build out. And so AI is without question, the number one topic that we see on that particular front. But then and every firm's a little bit different. It could be really strong depth in a certain industries, right? And there's really not an industry that isn't going to have at least some presence, right? Even for it could be consumer packaged goods, which is a space that the consulting firms have been serving forever. But if you are an expert in consumer packaged goods and you bring that level of expert, some really in-depth expertise to the table, and you've got a brand reputation behind you, or you've worked for the types of organizations that these consulting firms are serving, I can pretty much guarantee that they will talk to you, and there could be a potential fit. The other area, Will, that has been all the rage over the last 2 years has been transformation positions. So the consulting firms over the last 2 years, we've really seen a depression in classic growth strategy. But if you think about Bain, BCG, or McKinsey, they'll tell you, like, what's their strength? It's growth strategy. How do you grow your business? Over the last couple of years, growth strategy has not been their primary area of focus. It has been operations and a lot of transformation. So we've seen growth and transformation competencies from the consulting firms. And then I'll tell you right now, if you are a supply chain expert, especially with some international capabilities and skill set, I guarantee those firms would have an interest in talking to you as well, just like a lot of companies would too, if you had an interest in going full-time into the consulting world.
We have some questions here from the chat. So Oski asked about, do you see clients looking to improve revenue management or strategic pricing capabilities? You mentioned pricing earlier. Talk a little bit more about sort of demand for pricing consultants.
Yeah, so revenue cycle management, which is largely a healthcare competency, is very much so in demand these days. We have seen, and part of that is driven by the work that private equity is doing. So, private equity kind of goes in these different phases. 3 years ago, private equity was really focused on healthcare roll-ups, right? So veterinary clinics and rehabilitation facilities, urgent care centers, all of those types of businesses went through a series of private equity roll-ups. Dental offices were huge. All of those firms, those private equity firms that now have these platforms in healthcare services, are spending a lot of time trying to optimize those businesses. And I would be willing to bet the top area where they are focused right now is on revenue cycle management. So for those of you who do have revenue cycle management experience, there is a lot of demand for that in the marketplace. So much so that we created a practice here at Charles Aris That's it. That's all they do. You have a dedicated person. All they do is recruit revenue cycle management individuals. So that's high demand. Pricing, pricing got really, really popular probably 5 to 7 years ago, and then it kind of went through a little bit of a lull. But I can tell you without any question that over the next 12 months, pricing is going to be a huge topic simply because of the tariff impact and how companies can react to this. What amount of those tariffs can they pass along to customers? And so pricing will grow this year, although there hasn't been quite as much demand on pricing services, I would say, from a consulting perspective over the last 3 years. It's been a little bit more muted.
Several times a week, I hear people that are interested in becoming a private equity operating partner. Talk to us a little bit about what is the path to private equity operating partner. Are the PE firms hiring at all for that? And if someone is interested in one of those sorts of roles, leaving independent consulting behind and joining a PE firm in that role, what's your recommendations?
Yeah, that is a great question. I'll show one other thing here. We produce a private equity operating partner compensation study as well. So, team, I'll share a couple things here that I think will be helpful for those of you who do have an interest in portfolio operations type roles. Maybe a couple things that I'll mention. One is this slide. This slide I think is fairly relevant for this. So this is a summary of all the individuals that we have from our portfolio operations compensation study for last year. This chart up here in the top left-hand corner shows you the educational background of all the individuals that are in portfolio operations. You'll see everyone has a bachelor's. A little over half the group have an MBA, and you'll see kind of master's non-MBA, but a much smaller group that might have a JD, a PhD, or other. And then look at this work experience down here, right? So the vast majority of portfolio operations individuals in the marketplace for private equity firms do have strategy consulting in their background. 37%, 1/3 had corporate experience. A different third had worked for a portfolio company in a private equity firm. You'll see CXO executives of a certain amount, GMPL, investment banker, military, but you can kind of see those backgrounds. You can also see that we break down the roles within portfolio operations by specialty. So question one that we ask is, are you a generalist in your role, or do you have an industry specialty or a functional specialty? The majority of our respondents still serve as generalists. 2/3 just serve as generalists. They work across industries and across functions. But 20% were industry specialists, tech, software, industrials, and healthcare being the leading three. And then roughly 15% or so were functional specialists. You'll see talent here. We talked about that before, being one, commercial, go-to-market, digital, procurement, supply chain, and finance being the other ones. And then the last thing maybe I'll share with you guys. You guys can get this report on our website as well, but you can see kind of the compensation for these individuals is actually incredibly attractive, right? So cash compensation, even at the more junior level, starts at 250, goes to mid sevens, and then the carry component can be very, very valuable for these individuals as well. So, Will, maybe to answer your question directly, yes, portfolio operations teams are hiring. We have a practice that does nothing but that to help private equity firms find their next portfolio operations individuals. There are 3 kind of experiences that we have found that private equity firms value in their portfolio operations teams. Okay, one of those is consulting. You saw that on the slide that I just showed you, right? So consulting experience has proven to be valuable for private equity portfolio operations group. The second is operating experience, serving in a company as an operator. That doesn't necessarily mean you have to be a P&L owner, but it does mean that you've served in some kind of functional leadership team. Maybe you've led a commercial team. Maybe you've led a finance team. Maybe you've led a supply chain group or something along those lines, right? Would be that. And then the third is some kind of private equity experience, whether you got that through your consulting work or you got it from the operations role that you had within the portfolio company. A lot of firms do value that. So we have some clients that say, I want all 3. I want a candidate that's going to join my portfolio operations group to check the private equity box, check the operations box, and check the consulting box. That's an incredibly narrow space. But most of our clients, private equity clients, do want 2 of the 3. And so a classic background for portfolio operations executives is started their career in consulting, left consulting, and have been in an operating role at a company, for the last, 4 to 5 years. There are some private equity firms that in order to be an operating partner, you must have served as a CEO or a CFO or a COO for a large company. But that's actually a trend that we find is dying out. We find that a lot of private equity firms now are willing to accept individuals that have not necessarily served in the C-suite in the operating capacity, but they do have a strong combination of consulting experience and operating experience as well. They are hard roles to come by the way, everybody. There's a huge amount of demand and not as much supply of availability for those positions, but they're definitely hiring people in their portfolio operations group. And they will be hiring more of those individuals now because hold times just got extended. Tariffs increased these hold times. So hold times were already being increased because of the increased interest rates that we had over the last couple of years. That's why there was so much momentum coming into this year. Everyone felt like, wow, we're finally going to get some deals done. Tariffs have totally halted that. Now companies are thinking, man, I took the EBITDA of my portfolio company from 5 million to 10 million. I was ready to sell. Now I've got to hold on to it for more time. I got to go from 10 to 15. And the way they're going to do that is making sure that they've got portfolio operations experts that can help companies to get to the next level.
Chad, Graham Leary mentions a Wall Street Journal article that talks about how the Department of Governmental Efficiency has cut some very large number, potentially $20 billion of consulting contracts. What do you see as the impact of that with all of that consulting supply now freeing up and coming on and flooding the market, if you will?
You know, what's interesting is our phone, like if I go back way back in time, go back to the Great Recession, our phone rang off the hook from candidates saying, I'm on the street, right? I no longer have a job. Hey, what do you got, Charles Aris? Right, I'm looking for my next gig. Interestingly enough, team, we have not had that happen this year to date. And we were kind of bracing ourselves for that a little bit. Team, most of that DOGE consulting is impacting federal and government-focused practices in the marketplace. Booz Allen Hamilton, probably holding my breath a little bit there, right? All they do is government work, right? Deloitte has a huge government practice. Those are areas where we know there's still some question marks out there those contracts are definitely being impacted. All of the firms have a presence in government work. I shouldn't say that it's just Deloitte or Booz Allen Hamilton, but those are bigger firms that have significant practices that we fully expect will be impacted by some of the DOGE work. Now, here's the thing I'll mention, team. In the commercial world, right? Like we work with we don't work with government, clients. Our clients are private equity firms and commercial companies, right? Publicly traded businesses. I will say this, team, if you are a government-focused consultant, it is hard to convince a commercial company that you can be successful in their world as well. For those of you who have been focused on government and you are trying to make the pivot to commercial, just know that there's a little bit of an uphill battle. There's a reputation in the marketplace that government moves slower, it's more red tape. And can government consultants move at the same pace in commercial? I have no doubt that you can, but you're going to have to convince those entities that you have that skill set. But our phone hasn't been ringing yet, Will, as much as perhaps we saw in previous recessions.
Chad, for the roles that your strategy practice fills, for the individuals on this call who are mostly independent consultants and may have been doing this for a year, 2 years, or longer, what are some things, for people who, let's say they've decided they want to return to a full-time role, what are some ways to think about positioning yourself or ways of articulating your experience so that you can be considered, for those full-time roles and not, dismissed as someone who, was doing independent consulting because they couldn't get a job during that?
Yeah, well, it's a great question. So team, it's all about quantifiable results. Okay. So if you are considering a full-time job in the marketplace, a couple of things you're going to need to demonstrate as an independent consultant. A couple of things you're going to need to demonstrate to that corporation. One is that you have been busy. Your yield, right, has been strong. You haven't been sitting around a lot. You've kept yourself busy with a number of projects, and so definitely be able to talk about just the different projects, the length of those projects, and your ability to kind of keep yourself busy and just to not be on the beach for a considerable period of time. The second thing is, as I mentioned before, you want spikes in your skill set. right? Companies in general, right, hire for specific skills and capabilities. And so I encourage people to have really no more than two, kind of go to areas of depth that you know that you can walk in the door, immediately start to add value in that particular space. And so have kind of your core areas of focus, again, no more than two, and be able to speak to projects that you've worked on where you've made quantifiable impact, right? Your work moved the needle. Because of the work that I did, revenue went from X to Y, and specificity matters, right? It's not, revenue went up by roughly 10%. It's revenue went up by 9.3%. That level of specificity is more convincing to companies. Or because of the work that I did, our raw material waste went down by 5%, which translated into a $17 million drop to the bottom line. Or our inventory dropped, whatever it is, right? You guys know this a lot better. But very specific, quantifiable metrics were impacted because of your work. And because what happens is, if I'm the hiring authority, if I hear, oh, wow, Will, because of his efforts, he was able to reduce scrap in the raw material part of the process. He was able to do, reduce scrap by 7.4%, resulting in a $17 million trade bond. He can do the same thing for me. And that's what I mean. So that specificity that you bring to those conversations is incredibly important. If you're doing the outreach in your email, that initial email, you want it to have very specific numbers in it that show how you move the needle. And that's how you get the numbers get attention from hiring authorities. That's the part that I just, numbers get attention. So make sure you've got numbers in your outreach.
Chad, Eric Zanin asks about experience having set up a startup. To what extent is that valued by employers?
It's absolutely valued. In fact, team, we as I mentioned before, we work with a lot of private equity firms, and we work with a lot of private equity firms on their portfolio operations teams. We're doing a role right now, a private equity firm located in New York City, for a vice president in their portfolio ops group. That's a firm that wants two things. They want an individual who is currently working for a consulting firm. They like to hire people directly out of a Bain, BCG, or McKinsey, but they want them to have pre-consulting experience in operations, and they shy away from really large corporate experience. They don't want the person who's been with the Fortune 500 company. They want a person who's been with a much smaller business where they had to really have their sleeves rolled up and they didn't have a lot of resources at their disposal. They were the resource, right? And we've presented a handful of individuals that worked at startups, and as long as the experience was, again, able to demonstrate how we moved the needle and was doing real work and creating real programs for that startup, that can absolutely be valued experience, especially within the world of private equity, right? Private equity runs very, very lean. We have a joke here at Charles Aris. The worst question that a candidate can ask a private equity firm during an interview is, tell me about my team. Worst question you can ask, right? You're the team. That's what the private equity firm is going to say. You're the team. And so that's not always the case. Of course, if you're joining as the CEO or something like that, clearly you're going to have a team. But they run incredibly lean. So they want individuals who are used to having their sleeves really rolled up. They carried a lot of weight on their own shoulders. They didn't have a lot of support, and they found a way to get it done. So startup experience can, there's, as you all know, when you work in a startup, you do everything, right? There's, you run very lean. Resources are at a premium, and so it can be good experience.
Chad, to what extent is thought leadership, speaking at conferences, publishing, is that valued by, potential employers? Is that something that catches your firm's attention, or is that maybe less important than results in a role? Any thoughts?
Yeah, it's definitely less important than results in a role. Team, look, in no way, shape, or form am I going to discount going to a conference and doing a presentation. Hey, we all know the amount of work you have to do to prepare for that, right? You've got to do a lot of hard work and get smart and all that kind of stuff. But there is no question that any hiring authority, whether it be private equity or otherwise, they want to see quantifiable results in a job much more than they want to see published work or white papers or conference presentations. It's not even in the same category. In fact, too much of that work probably would be a yellow flag, right? If you had taken a year or two off to write a book or something like that, unless you were writing a book about massive impact that you had previously and you were truly the expert in the space, my guess is it wouldn't be valued. And not it certainly wouldn't be justify the 2 years that you put into it from a value perspective. So I don't think that's not gonna draw the attention that you want it to draw.
We've talked about AI a few times. What have you heard in your conversations with both, corporate, with PE firms, with consulting firms around displacing more junior roles? Like, do we even need consultants anymore if we can just have ChatGPT just, give us the step-by-step guide to how to do something? What do you see as kind of demand over the next few years for strategy folks?
Yeah, I'm actually pretty nervous about this one. And I know that I talked earlier about AI still being questionable and are companies really how much impact it's gonna have. We talked with a partner from EY Parthenon late last week. And I thought this was, he said something that first time I had heard this. He said, first of all, EY Parthenon is rolling out Microsoft Copilot across their entire organization. And they're training all of their partners on prompts, on how to prompt Copilot to be most effective. He actually said that based on some of his prompt training, he is now able to produce client-ready slides that he thinks are better than what his junior consultants have been providing for him. And he's doing it all via AI. All right, so that's a massive impact. That's the first time I've heard this, all right? So if that's really true, that's game-changing. Now, the challenge is, team, that these consulting firms are built on, partners being experts in their space. Well, those individuals all started as junior consultants that knew absolutely nothing. And they were sponges and they worked hard and they soaked up every last piece of knowledge that they could so that they could then regurgitate it later in their life and become partners. So there is no way that the consulting firms cannot have junior individuals if they hope to one day have partners, right? Those entire partnerships are apprenticeship-driven models. The entire history of those businesses are apprenticeship models. So yes, AI clearly is having a positive impact in that one instance that I heard about from that EY Parthenon partner. But if they said, we're not going to hire junior level consulting more, I would say, so that means your entire pipeline of your senior consultants is going to dry up. So that one is still a question mark that's out there that I would say it'll be really interesting to see how that plays out in the future.
Amazing. A cause for concern, right?
Yeah.
Particularly as it moves up the levels as well, right? So the engagement managers are next. First they came for the analysts, and then I was silent. What about board roles? I know that your firm does some work around recruiting for board roles. For folks that are interested in getting a position for those sorts of positions, maybe a board role at a private equity portfolio company, tell us your thoughts around that.
Board roles are hard. The reason why they're hard is because everybody wants them. They're sexy. They look good on your LinkedIn profile. So every executive I talk to, they end every conversation by saying, "Oh, Chad, by the way, keep me in mind for those board roles." I say, "Okay, keep me in mind." There's only so many board positions out there, and if I'm a private equity, and by the way, private equity firms, they build great boards for their portfolio companies. What they want is a thick Rolodex in their board members, right? They want the person who, for whatever that portfolio company's goals are and aspirations are, it's all about networking. It's all about, can I get the right person to help me move this company forward? So they want board members who have a thick Rolodex, know a space really, really well, and can make 5 phone calls about, that they're getting the right people on the phone at the right time when they need it. So your ability to demonstrate your knowledge in an industry or your knowledge of a function and to have a thick Rolodex is what's going to drive success in board seats. Yeah, I mean, there are definitely roles out there. Private equity firms build those out, but it's all about the spikes, right? The spikes that you have in your experience and skill set is what's going to drive success in board seats.
Nadia asked a question about if you could just harken back on something you said earlier. You said blue collar and white collar services companies, PE firms are taking a look at. Just say a little bit more about that.
Absolutely. So in the blue collar world, it's all professional service, blue collar service, think plumbing, electricians, construction firms. Roofing is the rage right now. This moment in time, roofing companies, like call whoever your roofer is, whoever you use for roofing, call them. I guarantee they're like, oh yeah, private equity firms are dialing me a lot. So roofing businesses are big. So it's plumbing, it's electricians, it's construction, it's roofing, it's vinyl siding, it's garage door entities. It's entities that are typically localized, right? So if you've got a lot of mom and pop kind of localized businesses in certain marketplaces, HVAC is huge. Every HVAC company in America has received a call from multiple private equity firms in the last 2 years, every single one of them. So that's what I mean by those blue collar businesses, right? And those private equity firms are doing exactly what they did with those healthcare companies 2 years ago, right? The dental offices and the veterinary offices, they're just buying, across all these different geographic regions, rolling those all up under one banner, right? And then trying to do the integration on the back end, that post-merger integration work on the back end to make those firms more efficient, if you will, from an overhead perspective and things along those lines. So that's specifically what I mean by the blue collar space. On the white collar front, it's more like accounting services is where we've seen a decent amount of that, right? Where there's a lot of localized accounting firms, and accountants require CPAs, right? So there's at least a bar, if you will, that people have to cross in order to achieve that. We haven't seen quite as much on the legal, like other areas would be like law firms and things like that. We haven't seen quite as much on that space yet, but the accounting firms would be the number one example I would have on the white collar side that we've seen private equity firms double click on and start to invest in roll-ups on. Blue collar is definitely bigger than white collar roll-ups right now. I should mention that.
As we are coming here to the top of the hour, I will ask folks that are on the meeting right now, before you hop off, please do pop in the chat. What was one takeaway that you had, one thing that you found interesting, surprising, compelling, concerning, whatever? What was one thing that you will remember tomorrow from today's session? And while you're doing that, I'll ask Chad one closing question. This one was from Sanjeev. Talk about age in hiring. Some of us here are in our 50s or 60s, and ageism is illegal, but it can be difficult to necessarily get around. What are some of your tips for folks in their 50s and 60s or 70s who are looking for full-time roles? How to make sure you have a good shot at roles that are open?
Yeah, team. It's by the way, we have found that, think about my kids, right? In the kids that are coming through high school and college right now. One area that those individuals have struggled with in the real world is collaboration and just communication skills. And the reason for that is because they've been communicating through their phones, right? And business is not about communicating directly through phones, but actual interactions and face-to-face and building trust and things along those lines. We've actually had a number of our clients say more recently in the last couple of years, hey, a little bit of gray hair at the temples probably helps us in this role, so that we can bring more maturity to the work that we're doing. We're doing a position right now. We're doing a head of post-merger integration for a private equity-backed accounting roll-up. They're buying accounting firms and they're rolling those up. I've got. I was literally looking at our pipeline yesterday. I have a multiple candidates who have MBAs from the 1980s. MBAs not undergrads, MBAs from the 1980s. And I've got individuals on that same pipeline that have an MBA from the 20 teens, if you will. So almost like a 30-year difference. And so, look, at the end of the day, if you can demonstrate the value and you can demonstrate the passion that you have for creating that impact, the opportunities are absolutely out there. I'll just mention that.
Amazing. Chad, and for people on this call who want to be considered for full-time roles that you are working, where would they send their resume, or how do they get into your consideration set?
Absolutely. You can send a resume directly to me. I'll make sure that it gets added to our system. I'm putting my email in the chat right now, team, so you can email them directly to me. I'll make sure that they get into our database. Team, the other thing is, if you go to our website, charlesaris.com, we have newsletters across all of our practice areas. Those newsletters come out once a month or once every other month. They list every project that we're working on in that space. And so the number one way to stay in touch with Charles Aris to know what we're working on is to subscribe to those newsletters. And if you ever see anything, thank you, Megan, for adding that. If you ever see something on the newsletter that's interesting, the person who's leading that search, their name and contact information is right there beside it. You can reach out directly to that individual and say, I'm interested in this role. This is my background. Could I be a fit? And that's the number one way.
Amazing. All right, Chad, thank you so much. This was great. A lot of great comments. Appreciating the session. We'll kind of end it formally here. If you are, haven't yet put your comment in the chat, please do that, and then you can hop off. Chad, thank you so much for joining.
Thanks, Will. Thanks, Megan. Thanks, everybody. Really appreciate this.
All right, we'll leave it open for another minute or so. You can pop your thing in the chat and then hop off. Thanks, everyone. And thank you, Megan, for organizing. All right. All right. Thank you, Megan. I have to hop off. I have a 1 o'clock. So just keep it open here until people have dropped off and then get all these comments. So thanks everyone for joining today and thanks for your questions.